Something very serious is happening in Canada these days, something almost no one is talking about, but it could lead to one of the biggest economic disasters the country has ever faced. It all started with one thing: debt, or more precisely, Canadian household debt, which in August 2025 reached a terrifying record of 3.13 trillion Canadian dollars. Not million, not billion, trillion. That number isn't just huge, it's far beyond expectations. And the real disaster is that around 75% of that debt comes from mortgages, people borrowing money to buy homes. But here's the problem: home prices are falling. So people borrowed money to buy something expensive, and now it's worth less, while the debt stays the same, or even increases because of rising interest rates. Even the Bank of Canada is sounding the alarm, especially after seeing real declines in housing prices in cities like Hamilton, where prices dropped 5% in just 1 year. But that's just the surface. If we look back a bit, since 2022, prices have fallen by 29% to 40% in some areas. That means anyone who bought a house at the peak of the market now owns a home worth less than their mortgage, a very dangerous situation. This didn't happen overnight. It's the result of years of easy borrowing, rising prices, and banks giving out loans as everyone believed that real estate was the safest investment on earth. But when prices started to fall, the whole system began to shake. If you're new here, our channel covers global economic crises and market analysis. Canada's debt level is at a historic high, according to the Bank of Canada and Statistics Canada. Even during the real estate boom, numbers were never this extreme. With $3.13 trillion in total debt, any shock like a job loss or interest rate hike can cause massive economic damage. Mortgage debt alone is $2.33 trillion, 74.5% of household credit, a Canadian first. High mortgage exposure means even a small crisis can become huge. The Bank of Canada notes people are stretching thin to buy homes, taking massive loans with no room for error. A small increase in payments or a sudden setback, and everything collapses. Between February 2022 and August the following year, Canadian home prices fell 15.6%, the biggest correction in history. Canadians realized they'd bought overpriced homes, then watched the market crash. As home equity vanished, many owed more than their homes were worth, a real financial and emotional hit. In Vancouver, the disaster is even worse. There, the average mortgage payment now consumes 87% of a family's income. This leaves almost nothing for food, school, clothing, or emergencies. People are sharing homes, delaying marriage, or giving up on having kids. The crisis hits younger Canadians hardest, especially those aged 35 to 40, with a 200% debt-to-income ratio. They owe twice what they earn, making their finances vulnerable to small changes. In September 2025, inflation rose to 2.4%, surprising everyone. Core inflation remained stubbornly high at 3.1 to 3.2%. Markets lost hope for quick interest rate drops, pressuring struggling families. Bank of Canada Governor Tiff Macklem stated, "We can't declare victory yet, inflation isn't over." An RBC economist added that the real problem isn't rates, but people's ability to repay. Those most at risk are people whose mortgages are up for renewal soon. By the end of 2026, 60% of Canadian mortgages, mostly from low-interest eras, will need renewal. Payments could jump by 30% to 40% upon renewal, even without further rate hikes. A $500,000 mortgage could see monthly payments rise by $400 to $600, a huge burden. Currently, only 0.23% of borrowers miss payments, but renewals could spike this, triggering a massive economic shock. Government efforts to boost home construction are met with slowing projects in BC, showing instability. The wealth gap widens. The richest 20% own 65% of wealth, while the bottom 40% own just 3%. Home prices are expected to fall another 1.5% to 3% in 2025, putting big mortgage holders in trouble. Canada's mortgage system differs from the US, where 30-year fixed rates offer payment stability. In Canada, renewals every few years mean market changes can turn lives upside down. Canada's dependence on mortgage debt has made it a national economic risk. Now, let's discuss Ontario, where things are even more alarming. Ontario, once Canada's economic leader, is now facing high unemployment. In April 2025, Ontario's unemployment hit 7.8 to 8%, the highest since the pandemic, with over 50,000 jobs lost since February. This is like wiping an entire city off the map in just 2 months. Factories are shutting down, jobs are being lost, affecting everyone. Manufacturing and construction, the two biggest sectors, were hit hardest. Manufacturing output is down 15% from pre-COVID levels, and labor demand has collapsed. Factories that once ran 24/7 are now silent and closed. Car plants in Windsor and Oshawa, once vibrant, have gone quiet. Thousands of workers were laid off, with nowhere else to go. Construction faces a total breakdown, projects frozen, cranes idle, and prices skyrocketing. Developers are pulling out due to crushing interest rates. Former housing and infrastructure workers now protest outside Parliament. Workers who once earned steady paychecks now struggle to buy food. This is reality. Ontario Premier Doug Ford blamed the federal government for the numbers. He stated high taxes and bureaucracy are choking jobs and driving investors away. The federal government countered, blaming Ford for failing to diversify Ontario's economy. It's a full-blown political fight, and ordinary Canadians are paying the price. Ford announced a $350 million stabilization fund, but people feel no improvement as losses are greater and the future uncertain. Inflation remains high, prices are out of control, and wages aren't keeping up. Food and rent prices have exploded, with food bank demand up 18% since February. Economic confidence nationwide has dropped to 68.7%, the lowest since the pandemic. People no longer trust the government, the economy, or the future. Nationwide unemployment is 6.9 to 7%, with 33,000 jobs lost in March. Ontario alone lost 35,000. Analysts warn unemployment could surpass 8% by year-end, with recession lasting until 2026. Canada is stuck with outdated policies in a changing world. Experts urge a fast pivot to new industries like clean energy and AI, but progress is slow. Doug Ford promises action, but the opposition calls it playing politics. Ordinary people are caught in the middle, asking, should I pay rent or buy food? Should I apply for another job, or leave the country? Ontario is suffering, factories are silent, projects frozen, markets dead, and everyone is just holding on. So far, nothing has changed, the crisis only worsens daily. That was a summary of what's happening in Ontario and across Canada in 2025. We've reached the end of today's episode. Let's hope for better days, and subscribe for more videos.